I got such positive feedback in the last analysis that I did on Oklo. For those that did not see the video, feel free to check it out. I talk about the technicals and also dive a little bit into the fundamentals. I asked you guys the very simple question, what stock would you guys like me to break down next? And the most common stock that was suggested was ticker symbol SMR. I want to remind you that in this video, I'm going to share with you my opinion, and it's simply just that. I don't like any of these stocks. I think that in a market full of greed, these irrational valuations are supported. So I want to highlight the reason I believe these gained momentum, but then also I want to highlight some areas of opportunity or red flags that I think that you should be aware of. At the end of the day, you're an adult. You should make an informed decision based off of your trade criteria and also your risk tolerance. Don't put yourself in a position that you simply cannot tolerate. Let's go ahead and dive right into it. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. So right off the bat, again, jumping into the Moo trading application, we could see that ticker symbol SMR, which again is NuScale Power. I looked into it. It is kind of similar to Oklo, right? Which for those that do not know, OKLO, again, it has a very sharp, performance, especially in the past 12 months. Over 1,600% gain in the past 12 months. So Oklo, to my understanding and what I've understood from all these different posts, is that Oklo is like the main one that everyone is trying to pump. And then SMR is kind of like this is the next runner up. The thing that I don't like about this right off the bat is for beginners, I hope that you understand the difference between a trade, which is what I believe this is, versus a good fundamental investment, which I do not believe any of these are. Again, I think that with these irrational markets, it supports irrational valuations, but there's no reason to fight them, right? Because market trend and direction are in your favor. So if you do want to make money, it does make sense to go with the flow of the stocks. All I'm here to remind you is the risk. Understand that these will never last during a downturn. Never. Because again, there's huge irrational valuations. What do you mean? I mean, this stock went from $1.80 per share all the way up to $53 per share. And if we dive a little bit deeper and look into their financials, again, this is one thing that I love to do, not just look at the technicals, but look into the financials. I understand that the market does not care about financials. I'm not trying to convince you that it should. I'm just telling you that eventually it will matter about its financials when irrational valuations are no longer supported. And this is a company that loses $293 million a year. It has a revenue of $56 million, so remember that. But it loses $293 million. It has a negative PE ratio of 50.5 times its earnings, meaning that from what it's valued at right now to what it actually conducts as a business, there's a huge the simple way to put it is you are paying a premium to own it at this price. But just like PLTR, people are okay with paying for premiums if technicals and fundamentals support it. Kind of with PLTR, although there's an insane valuation there, it's done a very good job also kind of backing up its irrational valuation with insane growth. You would have to hope for this to be sustainable for SMR or even for OKLO, that eventually fundamentals will matter, and it needs to present that. If not, again, they'll just find another stock to pump, and then everyone that gets left holding the bag on SMR and Oklo will most likely see a 50 to 80% retracement, as it's done in the past before. If you look at its actual history, which I also like to take into consideration, it has previously pumped to highs of $15.80 and then dumped to $1.80. I want to remind you, this is why it's important to look at history. Not that patterns always need to repeat themselves, but that they tend to, right? That you are not surprised based off of future performance, based off of what has happened in the past before. And you can see that this downturn happened around 2022 to 2020, almost 2024 is what it led to. So even during a slight bull market, this company was still consistently selling off. Why? Because again, it just didn't have the hype or the story that it does now. With the current administration and looking at new forms of energy, you can see why these companies like SMR and Oklo kind of have an edge in the sense of they're unique. Although the fundamentals are not there, they have a good story. The current administration supports it. So as long as markets currently support it, they really need to get their things together to be able to present solid fundamentals, because eventually investors will care, but at least for now, they don't. So again, from $15, almost $16 per share, all the way down to $1.80 per share, losing what, 80% of its value. Let me go ahead and pull this up real quick. So I wanna, see what this downturn is. Yeah, almost 90% of a downturn, 87%. So I'm not a fan of that. I don't like seeing when stocks have had the capabilities of losing 90%. I feel like, again, it's always the most overvalued stocks with the most insane valuations that often will later end up experiencing those larger downturns, right? And now we've gone from $1.80 all the way up to $53. And let me make this, I want to be straight up with you. In this irrational market, especially as the Federal Reserve began cutting rates, and it still has a good story, as long as market conditions are still bullish, the pump can continue to happen. So I don't care what I title this video. Let me make this very clear. Yes, in this irrational market, valuations like this can continue to pump. SMR can push up to $50 to $60 to $80 per share, maybe even $100 per share. I'm not saying that it's worth $100 per share. All I'm saying is that, again, momentum is a very powerful thing in the stock market. And as long as the overall environment and market conditions supports it, then again, these companies can continue to thrive. So please understand the difference between an overvalued stock that you would want to short versus a momentum-based stock that is still pumping, that is very dangerous to short, especially when direction is against you, right? The thing that I also do want to pull up very quickly is when you look into the valuation tab under the Moomoo trading application, you can see that a lot of analysts still view this as a buy. I was actually quite surprised. This was very different than Oklo because of the insane recent push that it's experienced. The price targets are still within means. Shareholders, I was looking at, the activity and if they're buying or mainly selling. There's a lot of buying activity from institutions. Again, that's not to say that means that you should buy. All I'm saying is that it looks like they are still expecting more upside. I want to be very level-headed with this. I'm not here to say that I support it. All I'm saying is that, hey, institutions are doing it. So I don't want to say it has a green light, but there is no trigger right now for the market to cause a downturn, at least not yet. Once that does happen, yes, I don't believe companies like this will sustain themselves. But as of right now, it doesn't look too bad. When we look at the actual insiders and the buying and selling activity, insider activity under V members, you do have to be a V member under the Moomoo trading application, I believe, to see this. There are more bullish insiders than there are bearish. There has been a couple recent sales, but again, there's been more recent bullish activity than bearish. That was not the same story for Oklo, quite the opposite. The thing that I also do want to disclose is that there's this SMR floor selling stock in the open market. 2.5 million shares sold over the past 3 days. 12.5 million shares to go out, and the initial 15 million shares that they are able to sell. They have an additional 111 million shares of Class B shares. So, there are some insiders that are obviously cashing out. You have to remind yourself, a lot of these institutions or, original investors have schedules on what they're allowed to sell. My biggest concern is when they go outside of that schedule. If they begin to load off of their shares that were not originally scheduled, then to me that's a red flag. If it's all within a scheduled sale, then just like anyone, they're doing their part in either reducing their exposure to risk at these possible elevated levels. I don't hate that, right? You can't hate them for that. They're just being calculated. So with that being said, can SMR continue to be a stock worth trading? Yeah, I would say if you are an experienced trader, you know how to manage position size and you know how to manage risk, it's still an incredibly risky stock because there is huge downside, right? There's, according to this fair value analyst, I'm actually quite surprised by this, only 5.4% of downside. But when you look at different valuations or analysts, depending on what it is that you are looking at, there's a part of this where I saw that there was like 30 to 40% of downside. I'm not sure if I'm getting it confused with Oklo. I don't see it anymore. Just anytime that I see really strong pushes, I just like to remind beginners to be cautious of their exposure. There's nothing wrong with having an open position on a risky trade if direction is in your favor. Just at elevated levels, I would say watch your leverage. I hope that you are not borrowing money to buy at these elevated levels. A margin call is not something you want to experience when it turns against you. Leverage is great as direction is in your favor, but as soon as it turns against you, it is a very dangerous tool. This is just a reminder. Obviously, there is no break of pattern. It's still pumping. It's currently trading at the $56. It could pump up to the 53 and make new highs. No question about that. That being said, just be cautious as it continues to become more elevated. And if market sentiment begins to change and you see that, remember, don't be emotional, be calculated. That's all I'm here to remind you and to encourage you to do. The other thing that I also wanted you to be aware of is when I looked into their financials, one of the things that I was actually quite surprised by is if you go into investing.com, they actually hold more cash than debt on its balance sheet. I thought that was quite impressive. And this is why I really like to dig a little bit deeper into these different companies. It shows SMR versus other peer benchmarks, and it's doing a very good job. And the reason this is important is because when a company holds more cash than debt on its balance sheet, it means that the amount of cash and cash equivalents it possesses exceeds the total debt it owes. This position can be positive or bullish, signals that it suggests that the company is financially stable and has a buffer to cover its liabilities, weather downturns, or invest into growth opportunities. I like that. And its cash or cash equivalent pile has been growing. I also like that. Again, I don't like the stock. I don't like that it's a company that loses $293 million. I'm not here to support it, right? All I'm saying is that I like that aspect of what it's doing. It probably knows that it's very elevated and it's doing its part, kind of like GameStop did or AMC when it pumped up like 1,000%. They sold off a load of their share and stacked up on $5 billion of cash to put themselves in a cash-heavy position. You want to see that from a company. They're looking out for themselves. And I hope that you do your part in looking out for yourself. Remember, it's great to see what is possible, but don't obsess about what can be versus what it currently is. Just food for thought. And again, if you like the way that I broke things down on the Moomoo trading application, if you want to ever dive deeper and you're tired of your old and outdated brokerage, one of the things that I want to remind you is that Moomoo is currently having a promotion. Remember, you can have more than one trading application. Moomoo is available in the US. They have over 25 million users all over the world, and they are currently offering up to 8.1% APY on any uninvested fund. So if the cash is just sitting there, you'll earn up to 8.1% APY, and you can unlock up to $1,000 in NVIDIA stock depending on your initial deposit. So if you want to learn more about it, I'm going to put the link in the description. First link down below. Feel free to check it out. Again, I know it's very tailored to people who trade options. I don't trade options myself, but even if you just trade shares like myself, maybe it's an application, especially with that huge incentive, that you can take into consideration. Also, Investing Pro is what I use to perform fundamental analysis. If you want to check out Investing Pro, it's going to be the 5th or 6th link in the description down below. Again, these are all resources that I actually use. So other than that, I appreciate you guys' time. I wanted to dive a little bit deeper into the actual stock and not just knock it down because it doesn't align with my kind of investment or trade criteria, but I wanted to look at it in a very level-headed way where I can highlight both the pros, but also not be afraid to highlight some of the risk and some of the cons. So I hope that you guys enjoyed this little video. If you did, please consider dropping a thumbs up and subscribing. And remember, I trade live every single morning right at market open, and it's designed for complete beginners. You can watch me trade live for as little as $1.35 a day with the current sale we have going on. And if you want to check that out, again, look no further. Second link in the description down below. LPP 3.0 is officially out and it's available. So whenever it is that you're ready, we're going to be here. We're going to be here for you right at market open. Second link down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.